Morgan Stanley is one of the analysts coming out with a range of what they think the valuation of the company could be, anywhere up to, what, 85 billion, JP Morgan saying 92 billion, and it's a lot more expensive than where Apple trades. Yes, absolutely. And of course, when we say it's more expensive, that's its price to earnings ratio. Yeah. Of course, Apple is still an 800 to 900 billion dollar company, actually pushing $1 trillion. People are concerned at various times. It's really about the way that their businesses are set up. Xiaomi, they want to do a kind of lower profit margin on the hardware they sell, and then they make that back on selling additional products and services. So in that way, it's kind of more similar to the Facebook, Google model than it is to Apple's. But it's interesting that Apple is, well, every mobile phone company is realizing that we're getting some sort of stagnation in the rapid rate at which we buy phones. So they're looking for new areas of growth like services. And this is really where Xiaomi is sort of dominating to a certain extent. Well, it's what they're aiming to do, absolutely, yes. That's the thing with Apple. So I think Apple trades on forward earnings, it's about 15 times the price to earnings ratio, clearly. Facebook and Google trade at 30 times, and that's because basically Apple makes two-thirds of its revenue from iPhones. It has to convince you as an iPhone user every 2 years again to buy an iPhone. Facebook and Google generate revenue from a customer every single day. And that's the kind of Xiaomi model where they make money every day from their users and a little bit of money every 2 years. I mean, this is a juggernaut in China. It gives access to the Chinese population in terms of spending. Talk to us a little bit about where we're seeing growth go, because the numbers are pretty phenomenal in terms of the rate that we see Apple's smartphone shipments grow, for example. Yes, I mean, look, Apple was doing phenomenal growth in China until a couple of years ago. And then we've started to see in China that there's less of a focus on brand and more on value. And the fact is that a lot of the Chinese phone makers, you've got Xiaomi, you've got Vivo, Oppo and Huawei, all those guys have hardware which is not vastly inferior to what Apple can offer, but it's significantly cheaper. Yeah. And of course, they have a far better or far more extensive network of stores in China. Apple's trying to remedy that. It faces some hurdles from regulators, but they've got a bit of a head start there. And remind us just exactly what Xiaomi is doing in terms of coming to the market. They're raising, what, about 10 billion overall is the target? Yes, absolutely. So I think our colleagues in news have reported that it's 10 billion, which is a kind of small slice of the 85 to 90 billion prospective valuation. They're doing part of that in Hong Kong, part of that in mainland China. It's a dual listing. So, but interestingly, not going to the US at all, which other companies have done. Think of Alibaba, for example. And because it has no presence in the US at all? Well, it has no presence yet in the US. I think you could possibly buy some phones on Amazon, potentially. But there's been, hurdles to getting their hardware into North America for all the Chinese phone makers, because there are concerns about national security and the ability for perhaps Chinese security services to find backdoors into the tech.